Hi, Warriors. ECB day. So I can't say hello to everyone. I did see a couple of new people want to say hi to Marcus Toman. Welcome. Hi, Ingmar, Kman, Mike, all you guys. ECB decision. So let's just get to it before I turn it over to Blake and the team. Just one thing I wanted to show was this. You guys see my pound chart here?
Yep.
Okay. Okay. So Ryan, while everyone's looking at the euro cable, it looks to me like it's rolling over. I think there's more fuel for liquidation because there's probably more longs in cable because of all the negative news in euro. And it's been acting better. So it's probably attracted buying. I'd be careful here with cable because, this low was a confirmed low. It diverged a little from here, but it was 20. So I'd be careful with long pounds. I think you could be short against 28. And that's it. So what are you looking for here? Is it in the cake or baked in or surprises? What do you think?
Yeah, I'm. Oh, sorry. Let me shut down my squawk. I'm fearing the worst from ECB, to be
Yeah.
honest with you. But we might get a surprise. We might get a move. I'm going to be parked up at 106 or down at 104.50, 104. If we do get some sort of move and there's no game changing news, then I think we play the range. But yeah, it definitely looks like there's some stuff going through the euro at the moment. So it might be euro sterling that's moving cable more than
Right.
cable moving euro sterling.
Yeah. So I was looking at it. I mean, there's no divergence, but it's just like really oversold. You guys still like the shorts here. Where are you wrong in case it turns back over 82.70 or so?
That's 82, 60, 70 is the first line, but really 83, that will
Okay.
signal turnaround.
Okay.
So yeah, but yeah,
Um,
probably people a bit short on this breakdown, just squaring up a bit ahead of the risk event. But I'm
yields,
still short.
yields.
I wouldn't change it.
Okay. Yields still popping. Um, yen not responding today. I'm still bearish yen against this moving average.
Yeah.
So, I don't know. What do you think we could take it out first? 53. I said sell between 52 and 53, got closer to 53, but
Yeah,
um,
well, I've gone the other way at the moment. I mean,
okay.
I was short with you earlier in the week, shorting at 152 that first test.
Yeah.
I got lucky on that spike down on that
Oh,
sources
yeah.
headline. But
Right
I
there.
had a little, I had a little long yesterday after the data at
Okay.
152, and I've got to be off near 152.60, but it's back in the middle. And I've just noted that the last couple of days there's been a bit of a disconnect between
Yeah.
volume and yields.
Yeah. There.
Doesn't happen
Yeah.
often, but yeah,
Yeah. I mean, it should be challenging the highs, like the 10 years making new recovery highs. So you're right. There is a little it's not responding, which makes me think if yields come off, what's going to happen to it?
yeah.
If it's weak with yields going up, what
It,
happens if it turns into a tailwind, a
yeah,
headwind?
yeah, this might just be a bit reflective of perhaps the usual correlation. Maybe we're following the short end at the moment rather than 10 years because you're not seeing as big a lift up in something like the 2 years as you're seeing in the tens at the moment.
Yeah,
So maybe just plus we've got the Bank of Japan coming up and there's all that chatter around what they're doing. So yeah, it's the correlation is just weakening a bit while there's other stuff going on, I think.
all right. Great shot and live call by Blake in Canada yesterday. He gave the level he wanted to sell it. I mean, this is a 4-hour candle. I think this candle actually happened in probably 30 minutes or so. That yeah, see, there's a 30-minute candle. The whole thing happened in half an hour. And then you could have gone to the golf course, like I'm sure Blake did, so he could
Uh,
hook a few and
not
slice a
true.
few. Oh,
Not
okay.
true. Not true. No,
All right.
no. And you know what, Dale? It didn't reach quite the level that I wanted. I was looking to sell some, and I actually shorted some dollar CAD, but I wanted to sell it really above 142 to
Oh,
142.35. But you know,
yeah,
it's interesting. I think what's interesting about yesterday's price action is, you know, the Bank of Canada did deliver a 50 basis point cut, yet the Canadian currency strengthened as the
Yeah.
market believes that, you know, they're front loading rate cuts ahead of you know, the Trump you know,
yeah,
elect coming back into office. So I, you know, and I think, and we were talking about this in the Forex Analytics chat room, and
yeah.
you
I'll
know,
give you
came
the
in.
screen.
Well, I was going to say, and I think Kman probably, you know, we were having this conversation about, you know, like the last few weeks. I think people were thinking that, you know, that maybe central banks are going to be a little bit less. They're going to be less likely to cut now and save their ammunition. But then you have the Bank of Canada that did the opposite, where they're like, we're going to front load a cut, and then we're going to sideline ourselves for a while and see what transpires in the 2025. And I'm wondering if that weighed on the euro as of yesterday. So as of yesterday, when the Bank of Canada did that, the
Yeah.
euro started coming down as well, because people were looking ahead and going, well, you know, maybe the ECB is going to be a little bit more, you know, more aggressive. But, you know, K-Man, I wanted to bring you in to this conversation
Very
because,
good.
like I said, we were talking about
Morning
this
came in.
yesterday in the chat room. How do you feel about what's happened with the Bank of Canada, and then how do you feel about the ECB this morning?
Yeah, front loading. I thought they would be a bit more cautious, but they chose the opposite way. So McLem didn't shut the door on anything, but it's clear that they want to see what's going to happen next when Trump takes the seat. And S&P this morning seems to have been a bit the same, but they revised their inflation forecast lower once more. So they are really scared that the market is going to buy too many Swiss francs, it seems. But then again, they also said they don't. The likelihood of going into negative rates is smaller than before. The issue now is if you look at the inflation versus S&P rates, the real rates are already negative now. So yeah, Bank of Canada. I really don't know what to do with the Canadian dollar. Honestly, I don't. I don't know. I don't know what to think
By the
about
looks of the market, it doesn't either.
Nah, I really don't know what to do with it. ECB is a toss-up between 25 and 50. I think 25, and then we will see what kind of tone Lagarde is having. If she finally turns dovish, it should be a dovish 25. I don't see too much reason for them to be hawkish at all. If you look at the European situation, if you look at the economic situation, politics situation, nothing to write home about. So yeah, I still don't like the euro. And if we would get a bit of a surprise blip on her being too undovish, I think we are going to find probably sellers in some instruments against the euro again. Yeah, I think what Ryan said about euro sterling is just people managing their books right now. We see the rest of the euro crosses as well, barring yen. That's a different animal, being a bit better bit. So let's see what happens after the ECB. But I'm still not a fan of the euro.
You think we could
Ryan,
retest
oh, go ahead.
lows? Came
Go
in.
ahead.
I think we could retest those lows,
Well,
take them out.
if they surprise us with, or if they go all dovish and do a 50, yeah, I think 103 is on the cards before we move over into the
New
Fed
Year.
week.
Yeah. Oh, the
But
Fed. Yeah.
yeah, but are they really going to give us that bearish picture? I don't know, to be honest.
Okay.
You know, it's hard
I
to
know
see.
the
It's hard to see a world where the euro rallies right now. And
Yeah,
usually when I feel that way, that's where it can sneak up and rally. You know, when I go, there's no other direction than a lower
positioning, maybe.
euro.
positioning may cause a bit of a revival, and I also think we've got to differentiate euro dollar from euro crosses as well. Euro crosses can stay very heavy,
Yeah.
and euro hang around 104 and a half, 105 and a half.
I want to tip the hat to Ryan this morning because I see you finally convinced other people to use the term undovish. Way to go, Ryan! You're really making
That's
your
not a
rounds
new
here. I
Yeah,
think everybody's going to start saying undovish. I mean, this
The
is
That's
new
good
yeah,
stuff.
language.
it's going to be in the dictionary soon. That's my
Right,
aim
right.
for 2025.
So hey, real quick, we were just in the Forex Analytics chat room talking about, some of these Swiss pairs. I think they look pretty interesting. And Kman, I think you're right. I mean, you're getting the Swiss National Bank, and this is a news article that we've been circling around in the newsroom in the Forex Analytics chat room. If you guys, aren't in the Forex Analytics chat room, you get great captions like this from Batman, but more importantly, we post a lot of news articles that we are reading, throughout the course of the day, throughout the course of the week that makes sense. The Swiss National Bank is really trying to dissuade investors from putting money into Swiss francs. And if you look at the Euro Swiss, this is one that I think is really, really interesting today. And I'm giving you guys that are not in the Forex Analytics community, I'm going to give you guys a little bit of a freebie here. This is a really major trend line, and this is what I'm looking to play here post ECB. If we are in a world where the euro actually breaks out to the upside, which I still can't see why that would be, I'd really want to play the Euro Swiss on the long side because look at all this support down here. The flip side is if the euro continues to drift lower, I think any dip is going to be bought as we, drop maybe about 50, 70 pips below where we currently sit. So, and that's something that we were talking about this morning, and something else that we were talking about this morning. And I'd love to get Ryan. Oh wait, we got 2 minutes away. I want to just show everybody in Forex Analytics. If you go over to the options, Ryan, can you tell everybody about what you put up here every single day as far as the options, and you and Kman talk about the importance of those, because we were just having this conversation in our chat room, and if you're not in our chat room having these conversations with us, I don't know where else you would be. This is what we talk about in all these threads. As I get set up for the ECB, can you guys talk about that? Let's start with you, Ryan, about what you post here in the Forex Analytics platform.
Yeah, so the orders are just interbank orders that I get off a source, and the options are the expiries that we get every day. It just gives you an idea of what the options market are doing. If we've got any big sized expiries to keep an eye on, it can keep the price glued around certain levels, depending how big those options are. And and we've got the option widget detailing the volatilities and implied vols and everything on the dashboard as well, which just gives you an idea of how, particularly around ECB events and things like that, the market is looking at how far the price may move, because they tend to put options at each edge of that range that they expect, or you'll see the volatility numbers reflecting that. So yeah, it's just a bit of extra knowledge for traders to factor into their trading.
Hey man, how important are those options?
We regularly talk about those, and we also talk about what you can ignore and what you should do or should pay attention to. We have to know that the euro dollar is extremely deep as a pair, extremely liquid. You need to really have like big expiries to start magneting something. But
Like
they
in
can
the
have
couple $100,000?
a couple of billion,
Okay.
couple of billions rather, depending on the liquidity of the pair. I mean, if you have like 2 billion Aussie, it's not the same as 2 billion euro dollar, for instance. But no, you can look at levels. If the level is very close at expiry, it may mean that one or so of the options have magnet, and if it goes against fundamentals, there may be a trading opportunity sometimes. And we are 15 seconds away from the ECB.
Look at the euro getting clobbered ahead of the decision, just getting blasted here. I got out of it last night at 105.24, so I'm pretty happy that I got that fill. All right, guys, here we go. You guys see anything?
25.
25. Well, you know, I think the market was thinking, hey, maybe we might get 50. So maybe we get a little bit of a lift here.
No chance.
Yeah.
No one was thinking of 50 today. No
Oh,
one.
come on. Everybody was thinking in the back of their mind that it was possible. After
Nope.
watching the Swiss National Bank and the Bank of
Nope.
Canada, everybody was thinking it was possible. Now, I didn't think it was going to happen. You didn't think it was going to happen, but obviously the market was like, "Oh shit, how about if it does happen?" So, you know, we're getting a little bit of recovery here, but really the mover is going to be in the presser, guys. If you're not, you know, akin to that. We're going to have a presser in how many minutes, Ryan?
30 minutes.
13
And,
minutes. So
yeah, the statement looks all pretty samey, not pre-committing to a path and blah 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 blah. So get the
okay.
coffee on.
All
Had a
right.
little
Well,
stop hunt in gold last night, Blake. We took out the highs from late November by a few bucks, and the action's not good. We all know silver's been dragging its ass around,
yeah,
so doesn't look great. Gold silver ratio looks okay. So
you know,
silver's still the preferred short.
just, you know, because if you guys haven't seen it, I mean, gold completed its range extension yesterday. I mean, it did
Okay.
exactly what, you know, we had been looking for. Well, here, I'll just show you guys. Here, if you go to gold, right? And you go to basic technical analysis and you look at the daily chart, right? And here's our range extension, here's the extension. And if you go to, earlier this week, you know, gold's range extension to 27.22 is holding well despite the dollar continued recovery. And we hit yesterday, and that was on the 11th, so that was yesterday.
Yeah.
And we completed it all the way
Yep.
to there. So now that we're there and it's completed, yeah, what do you do with it now? You know,
Yeah.
I mean, I think gold's still holding up well, and it acted perfectly from a technical analysis standpoint. We broke this descending trend line earlier this week.
Yeah.
We came back, retested it, and then we continued on to right where we needed to. So, you know, I don't know. I don't know if I'd want to be short here, but I think it still looks decent. But what silver is, you know, underperforming. So what do you make of that, Dale?
Um, that the dollar has become the new beach ball. Okay. And I think that's part of it. I think yields are part of it. And, I think that people are still bulled up and trapped in things like silver. And, I don't think silver bottoms till the dollar peaks. And I still think the dollar has 109 in it. So if the dollar has 109 in it, silver could have 28 in it,
That
27.
that looks like a head and shoulder pattern to me. I mean, well, while we trade below this 32 and a half, it
Hmm.
seems entirely possible, right?
That's
Yeah,
a nice look.
I've got that around 32.85. The perfect second shoulder, no?
Yeah, I mean that's if we get there, but I wish
Symmetry.
the
Yeah.
market was symmetry, gave us symmetry all the time, and unfortunately, you know, as it, you know, horseshoes and
Even
hand
if
grenades,
it's
folks.
even if it's equality, we went from what 35 to 30, call it,
Yeah, it could end
$5
it could end up being symmetrical in time versus price,
equal.
you know. Yeah.
Just an equal wave down would take it down to 28, your
Yeah,
78.6 level.
yeah, so I'd agree, you know, as long as we're below 32.50 to 32.80, as Kman
Yeah.
said, I'd probably be very defensive, you know, if I was long
Yeah.
silver. Hey, you guys, I don't know if you guys saw this. Adobe's down 10% this morning, or maybe a down 11% this morning. Got crushed. I mean, look at this stock. I mean, you know, we're down pretty good at this moment. So yeah, Adobe got smashed. I mean, that's one of the things that's keeping the Nasdaq heavy. Let's talk a little bit about the stock market, Dale, because I look at the S&P and it still looks really bullish. I know we're
Yeah.
sitting right at all-time highs. What's going to stop this juggernaut of a market?
Maybe it's a dollar. Maybe it's yields. I don't, I can't come up. Maybe it's Geo. Um, the S&Ps couldn't make new highs. I don't think the top is in, but we could still trade 6165. I mean, it's possible.
Well,
But
this bull
I
flag
like your
actually
line. I
points to
like
6,300. So,
just wait for it to take out 6035, like you were saying. That would not be a good sign.
no, but I mean, if you look at all these support levels, you could have caught us 3 months ago and said, oh, we'll just wait till it takes out 5,700. And then last month, oh, let's just wait till it takes out, I mean,
Yeah,
I guess that is the 60-30 level that we should be watching. But while we're above there, it still seems pretty damn bullish, doesn't it? And
that's what I
then,
said.
yeah. I mean, we still have the Fed that's coming up this next week. All right. Well,
Yeah.
let's talk about, some of these euro crosses, see what's happened. I mean, the euro looks like it, pushed new lows, ECB, you know, cut as expected. What do you think this press conference is going to be like, Ryan, when we have to, are you on the tan indicator lookout today?
Oh, sorry, Blake. I'd already fallen asleep in advance. Yeah, I'm going to get the color chart up as we speak.
Yeah, all right. Well, the color spectrum, on Christine Lagarde's tan tells us a lot about which way the euro is going to be flying today. But maybe Kman can jump in here and answer this. When's the last time we walked away from an ECB meeting and we saw the euro rally? Because I can't, and I'm not really good at putting that together, but in my recent memory, I can't remember the last time I saw the euro rally after an ECB meeting. Do you?
Minor things. But yeah, I mean, there were other coincidences as well. Yeah, I just can't see. You know what? Euro could tick up a little bit because of positioning. That's the only thing I can see that
I'm
would
with
push
you.
it up.
Yeah.
But that's about it. Yeah, I'm watching Euro Sterling with a bit of interest. I was just saying in the room yesterday when we went over 82 and a half, we found some sellers coming in straight away, very nearby market, and we are not far away. If there is a bit of euro recovery, we may see a bit of a retest of 82 and a half. That's your nearest level just because of the price action yesterday. That's going to be an interesting watch, I think. For the rest, I don't, I really, I don't see any reason to go long euros. I don't see the reason.
God, and like I said, for me, I always feel that way. Like there's no reason to be long euros, yet the euro still holds up better than expected. Now that doesn't mean you should be long right now. I've been playing around on the long side, but today I'm a little hesitant about doing so. But that hesitation might be one of the reasons why the euro would rally, because everybody's hesitant
Uh,
selling it, knowing that flush out that we got down at 103 and change is still down there, and still to me seems pretty valid because we made that push, following the French headlines. We even filled the gap, a couple of days later, and we've yet to get back down there again. And
I,
I don't
I
know
think
if today.
that's. I
Go
think
ahead.
last Friday after the jobs report, when we flushed 106, I think that released a lot of pressure because we were all saying it. You were saying it. It was building for a
Yeah,
bit of
yeah,
a break, and
right.
yeah, let off the pressure, and now we're back in the mixing bowl.
Yeah, and as a matter of fact, I think I should delete this inverted head and shoulder pattern because we've elapsed the time from a symmetrical standpoint quite a bit.
Yay! Kill it!
But
Kill it!
oh, come on, man. I'm just looking for something to do around here. I'm looking for something to trade going into year end. Speaking of which, going back to the options chat and the conversation we're having, Mark Chandler, which Dale, Mark obviously very well. I've known him for a couple of decades now, and he messaged me this morning and said tomorrow the euro's got a huge expiry, like over 4 billion expiring at 104 the figure down here. So a lot of people expecting very dovish ECB. Do you think we trade down there, Ryan, based on your experience with those huge ass options expiring tomorrow down there?
Today, no, no.
No, not today. By tomorrow, though. I mean,
Oh, by tomorrow,
it's a Friday expiry. So
no, not really.
yeah,
It's if we haven't managed to come through everything we've come through the last, well, it's nearly it's over a month now since we've been messing around this 105 area. If we can't get through that on this, I doubt we're going to get down there tomorrow on those options. But stranger things have happened. You never rule anything out in this game.
right, right. Okay. Well, let's go around the horn. I just want to make sure I haven't missed anybody. So Kman, what are you looking at today? I mean, we got past the CPI yesterday. We've got we've obviously we got the European Central Bank right now. We just came off the Swiss National Bank, who gave us a jumbo cut. We've got the Fed next week. What are you going to do today? I mean, is there anything that's really got you looking? Kman, you're muted, by the way.
Sorry, I'm a little
No
uneasy
problem.
on the back of the labor report over there. I've been trading it around already as I usually do. But for the rest, main
Oh,
position,
I'm sorry. You were muted when you said you were trading what around the labor report?
the Aussie dollar.
Oh, the Aussie. Okay, got it.
I bought I bought a little on the report, but it's back at the level. Very little things are very little moves after statements or numbers are holding. But my main position is still euro sterling. I've actually bought some back this morning ahead of the ECB, but I already sold it out. I'm still pretty bearish there. But for the rest, my positions are relatively small, still a bit long gold because of the levels holding pretty well. I do think that there is a potential to get back into 2690s or even 2675.80. And there I may look to load some up again of what I
All
let
right.
around here.
Very good. Ryan, what are you focused on today? Anything in particular?
Staying awake.
Come on, you can give us
I'm trying to tempt fate here, Blake. I'm trying to tempt
I heard
fate.
I heard you on the Flow show or earlier talking about you might actually go long euro sterling. Now tell us why the hell you would do that.
Big level, 82, 82.15.
Yeah.
Huge level. I like a big level for a first touch. So if we
Kind of
get
like
down there,
you like big butts. You like big levels.
What?
You like big
Rumors.
butts and you don't lie. I know that. I know that.
Unspecified rumors.
So yeah, big level at 82. So you're going to try to trade around this, you think?
Yeah, I'm still short from up above. So yeah, I'll either do a separate long or maybe just do a quick flip because I can
I mean,
always
that
add
is
if it
like
does
one of the biggest and gnarliest levels I think we've seen. I mean, if we can get a foothold below 82, I don't know where the euro sterling's going. I mean, I guess in the mid 70s. I don't know. I mean, it's a big one, right?
at least 81.60. There you go. There's my next level.
Okay.
I'll let
All
you try
right.
and find where that is on the chart. You need to scroll back about 8 miles.
Uh, like over here. I know, over here. Yep, right there. Yeah, it's right there. Right there. Okay. God. I mean, it looks, I mean, we're talking a lot of history here.
Yeah,
All
we're
right.
going to 70, it looks like.
Yeah, I would think we're going into the high 70s, but anyway, I might just play it just straight out long sterling, but or long cable. But Dale, what are you looking at today?
Still bearish and short the yen, and today got short cable against 28. I think,
Oh, okay.
like I said, yeah, like I
All
said
right.
at
So
the
you're
beginning of the show.
selling cable up here, huh?
Yeah, I think
All
against
right.
that 28.
You were
I
my
think
arch nemesis until I get you stopped out of that trade. So there we go.
well, you may, but you may get me stopped out, but I still think it's going to 23.
Oh, geez, no. All right.
No,
All
Sir
right.
Pinkert strikes again.
No, Mr. Pinkert. Okay. Well, guys, I'm tell you what, I already kind of gave it away. I'm looking at the Euro Swiss today. I am looking to play it on the long side. I'm just seeing how deep of a dip we get. I kind of hope we can retrace a little bit more of what
I
we've
like
seen
that.
here. Yeah, I'd really play. I'd like to play this into the end of
Bit
the.
hotter,
No, I
Oh,
like deep of
wait,
a
PPI,
dip.
PPI.
bit hotter
Sorry.
PPI, bit hotter PPI, but a bit higher initial claims.
Yeah.
No,
So why is the dollar weakening? Oh, the core PPI month over month. The core number came in below expectations. Headline number was good, but the core number came
The
in. All right.
ex-food energy came out below.
Mm-hmm. All right.
0.1. Come on.
I mean, I know it's not a big mover and a shaker, but that, has people thinking, well, I guess the Fed can cut rates next week and continue to cut rates by another 2 full basis points into 2025. I'm joking about that, but that would be ridiculous. Anyway, again, I'll just reiterate, and sorry, I wish I would have thought that the PPI was coming out. I totally spaced it. Anyway, I am looking for a little bit more of a dip in the Euro Swiss, or I'm looking to play on a breakout, and that would be more of a end of year play. I think President Trump will be the,
he's ringing the opening bell.
oh, is he today?
I think today or yeah,
Well,
might be
anyway,
today.
I think he's also going to try to bring peace to this world, and I think that buying Swiss francs is something that people have done over the last couple of years for safety. So I think that a lot of that trade will get unwound as we go into year end. So I'd like to see a nice little breakout to the upside and see some Swiss francs being sold because the Swiss National Bank is making it easier for us to do so. So that's why I'm going to try to play Euro Swiss, maybe Pound Swiss to the upside. So anyway.
Yeah, way to lay it out. And you know what's key about what we do here? We don't just give an idea and then lazy people just, find a good trader and follow them. We give you the whys
Hmm.
so that it's a learning process for you. Like he just broke down this Euro Swiss trade, and it's a teaching tool too, if you watch why we're doing. So we're trying to teach you and not just, we're not a signal service. We're trying to educate you so you don't need anybody. Okay. You can do it on your own in an igloo like Kman and Ryan and Blake could do. They could do it on their own if they didn't have a chat room. The chat room's a big edge though, but you still want to be able to do it on your own. Okay.
Dale, I've had a chat room since we started the Wise Trade chat room in 2013. 13 or 2012, and there are several people that are in our chat room that have been in the chat room since then.
That's a
So
statement in itself. Yeah.
yeah, and it's a community that we've built of traders that we know, we're respectful to each other. We have great conversations. We take in each other's ideas and thought processes and share them amongst each other. And there's very few places you can do that and do it in a comfortable environment. And that's what we do, inside of our chat room here. So whether you're
Yeah.
in the trades room, you're in the general chat room, we have a lot of camaraderie where we're at, and that's what we've built over the last couple of decades. So that's
I'd struggle. I'd struggle without a chat room.
what's that?
I would really struggle with my trading without a chat room because
Right.
I'm sitting
Yeah.
at home in my office, 7 in the morning till 5 at night. If I
Yeah.
didn't have that outlet, I would go bonkers probably.
Yeah.
So
Yeah.
there you go.
Truth. So,
There you go
uh,
from a veteran. So
hey,
anyway,
do you
I
have
have
Rohit
Rohit
here?
here. Yeah,
Oh,
I need Rohit to accept the promotion. I'm going to make you president of F.A.C.E right now, Rohit. Accept the promotion, and then we'll fire you after the interview, and you could go back to India charts. Okay?
Oh,
You did it. All right, Rohit. Great to see you. At least your name and hear your voice. How have you been?
we've been good. We've been good.
All right, so here we go into year end.
Yeah.
Anything dramatic change for you? I mean, we've gone through, the elections here in the US and a red wave, and things are going to be different in certain ways here. In many ways, it's almost like we'll be tearing down the old order and starting a new one. It kind of reminds me of the transition between the British pound being the reserve currency and the US dollar. That when you replace something, the transition period can be rocky till you enter the new paradigm. So tell me what I should be paying attention to going into next year.
You're right. This time, these usual seasonal patterns that we expect, like the last time we discussed it, I was thinking
Yeah,
the markets cool off into the elections and then they rally after that. Usually, the presidential year in the US tends to be a bullish market
right,
after the elections. But this time we didn't get that dip. We, of course, got the bullish market so far.
right.
But on the other side, there's so much of sentiment data, some of which we will look at, which is starting to look like the market has gone too far. And that sort of doesn't add up with the idea that you're going to get a full year of positive gains.
Okay,
So a lot of
so
contradictory forces, and we are scared of all the noise that's coming out in terms of what is going to change on trade. That has created its own set of fears, which will take time to resolve. But in the meantime, because it has led to strength in the dollar, if we look across Asia, we
yeah,
are not.
you need to share your screen, buddy. But
Yeah,
go ahead. Go
yeah.
ahead.
So if we look
So that
across Asia, we actually not seeing, we are not seeing any performance in Asia for quite some time.
okay,
And India has actually topped out. So I've opened the India chart first. Usually we end up discussing
okay,
it at the end.
okay.
And what I see here
Excellent.
is, yeah, I see a 5-wave decline. So I think the Indian stock market for the time being has peaked
Right.
and would probably, we are seeing a counter trend bounce, which can go on for a while because we haven't yet broken key levels. It's possible it goes up to the 61% retracement, which is closer to 25,130. But from there, I would expect another 5-wave decline, which will then open us up to going back to maybe 22 or 21,000 on the downside. So the Indian market is in doldrums. The only part of the Indian market doing very well is the small cap index. But that
Interesting.
also should be at the FAG end, I think, probably completing a fifth wave at some degree from March 2023, where this started to all go up.
Okay.
We are trying to complete.
That's your Russell.
No, this is the Nifty small
No,
cap.
but right, it's India's Russell.
Yeah, it's India's Russell, of course. Yes.
Yeah, that's what I'm saying. Trying to, yeah.
Yeah.
Okay.
So, yeah, this particular market would probably, complete a bigger one too, if I put it this way. This 5-wave being the third, and we probably complete a 5 in this recent move. So I'm expecting all of this to complete into the year end or before the year end. And very similarly, now when I look at this and then I put it in context with what we seeing in the US, like I said, sentiment. So let me just go over some of the easy charts on that front. So this is one which is of course, the PCR. I've taken an average. I've taken a 13 or 15-day average of the data so that it's a little more smoothed out. And at least the last couple of times we got to this blue line down here. It was some kind of a top in the US market. So that is something that I think about whether this is going to happen once more because we are already down here on the data.
Right. Okay. So that's your put call ratio at extreme bull. Oh, even took it out. All right.
Yeah. Yeah. We've taken it out in the recent move.
Yeah. Okay.
So we have seen the Dow, of course, roll over. So the way I'm actually counting, so if I go to the wave counts here, is trying to complete a lot of 5s. I'll just clear these markings. Yeah. So a lot of 5s, whether it's the Dow, we're trying to be in the 5th wave, whether it's the S&P,
Yeah.
also trying to complete a 5th wave, and so on the NASDAQ. The NASDAQ's extending a bit more, so that's making us feel that maybe something is still pending on the NASDAQ. It may not be, completely done.
Okay.
But
It's
yeah,
been
we'll
the
have to wait for
strength.
that.
Okay.
And then again, if I look at another measure, this is the number of S&P 500 stocks above the 50-day moving average. Strong divergence, similar to what we saw in March of last year. We're actually seeing a big divergence over here with price which is going on. So we made a lower low and number of stocks is not participating. So I do feel this is like a last move going on, and we have seen tops like even 2022, the top occurred at the end of the year. December of 2021 is when you peaked out back here.
Right.
So
Right.
December does have sometimes that effect. You have the year-end rally, and then does it roll over because all the sentiment data is reaching a
Okay. So I
precipice.
wanted to ask you a question. If we're
Yeah,
completing 5 here in the S&Ps, even if
yeah,
there's another high,
yeah.
the bears are saying that's going to be it. But isn't there a scenario where we could have like a 20% sell-off and go back to wave 4 of lesser degree around 4,900, 4,800, and then make another run to new all-time highs? Have you looked at a count like that?
Yeah. So
Yes.
so it really requires us to believe that we will not go below this, fourth wave of the previous degree. And whether
Right.
this is the fourth and we have completed, and are we really completing 5 in a still very, very longer term structure? If we really go monthly or yearly, should we consider that whatever started in 2008 is complete? People have tried to do that over and over again, but every correction has led us higher and higher.
Right.
So if you're completing something bigger, would it be more than the fourth wave or not? But yeah, the fourth wave does occur as an endpoint for most bear markets, even at a higher degree of time, because somewhere,
Yeah.
government action kicks in and you get stimulus and
Right.
so that does become the worst case scenario. You're right. In any deep bear market, this would be the worst case scenario.
What, 3,500 or
Yeah,
4,900?
3,500. I think, yeah, the bottom end, absolute low.
Okay. All right. Interesting look. Where are you at on the dollar, buddy?
Yeah, the dollar's been very, very different. So let me just go there. One sec. Into the wrong chart. Yeah.
You sound very confident today. I can tell when you have, look, we all, I'm an analyst too.
Yeah.
And there's
Some
times,
things, yeah.
yeah, there's times you have conviction and there's times you don't know. And I could tell by the inflection in your voice that you're pretty confident about what you're saying right now. Do you always feel that way?
No, of course not. Not
Right.
all. But yeah,
Okay. But
some things
am
are
I?
clearer than others. Like the Indian market 5-wave decline, that has given a lot of clarity. We
Yeah.
have something
Okay.
like that on gold also. There is a 5-wave decline in gold. So at least in the medium term, that has clarity. The
Okay.
dollar index has me confused, and I'll explain why. When it did fall initially, so I should actually start with the long-term chart of the dollar and the momentum. So there are two things happening here. This is the momentum chart. So sometimes I try to look at both the momentum and the wave count. The two
Right.
can sometimes give you a different indication. So on the monthly chart, the dollar index is actually given a buy signal here after a very good squeeze on the Bollinger Band. So that
Right.
sort of indications that you're on a bullish swing. Okay, and we are trying to figure out whether this is going to be a bullish swing, which is only a retracement of this fall, or is it going to be an all new cycle that ends up taking us to much higher levels. The setup for much higher levels is definitely there, so I cannot rule it out. But on wave analysis, I can try and think whether it may or may not happen.
Okay.
Okay, so then when I look at the wave structure for a long time, I've been wondering that why don't we really complete Z, or this entire structure which started from 2009, where the dollar has been rising. At some point of time, we've got to complete this, WX, YX, and it's a nice channel to really complete within. I did initially think this is
So we
yeah.
need another run up to the highs, a new high is what you're saying to complete the pattern.
No, the pattern could have completed over here.
Oh, okay.
I have marked Z. Z is usually the last one.
Okay.
But now I'm looking at the momentum setup. I should be open to the idea that, yeah, maybe we can do this also.
Okay.
That's not something I was thinking earlier, but now that we
Me
have gone
either.
past this high,
Yeah.
it is an open possibility. So this was a
Okay.
very interesting pattern over here. It's a classic pattern. I think few people can spot. It's known as a diamond. And
yeah.
I thought, yeah,
Yeah.
I thought the diamond would end up being a B wave and give us that downturn in the dollar index. So I was thinking this is only going to be a retracement and head lower. But now that this is taken out, I have to open up to the idea that anything's possible on the upside.
Oh, hold on, Rohit. You're
Yeah.
as brilliant as a diamond. I better put on my shades. All right.
Yeah, thank you so
You're
much.
blinding me with your brilliance. All right. So, okay. A couple of options. I was thinking maybe up towards 110 and then we sell off again, but
Yeah.
we'll see.
Yeah. So that would be the 80% retracement
Yeah.
of this entire fall.
Right. And you
So
said gold, you have clarity with gold though, after the
yeah,
5
gold,
wave
I do
down.
have much more clarity. So let me just come to the gold chart first on the long term. So in the big picture, I think we are somewhere in the fifth wave from this bottom, 1, 2, 3, 4, and we are inside 5. But
Yeah.
5 is not looking certainly complete. It looks like this is 1 and 2. Looks like we've done 3. And if I go to the daily time frame, so let me just do that, then I see that the fourth wave is likely to stay around for a while because on the daily chart, we have a very clear 5 wave decline in gold prices. So that is the clarity I have is that this top is here for some time.
Yeah.
The 1, 2,
Okay.
3, 4, 5.
Yeah.
We're doing a bounce, which means this is A, this is B. We have a wave C coming in at some point of time, maybe sooner because we've almost retraced 80%.
We did it last night. It took
In the
out
spot,
the,
yeah, in the spot we did not. In the futures we
oh,
did.
okay.
So there's
Okay.
slight difference still. So I leave
Okay.
that much room to the upside for
You're a purist. You're a purist. Have you noticed that a lot of technicians are very anal? Huh? That's why I call them technical analysts. Anyway, all right. So we have gold. What else?
Yeah, so
What?
gold, the possibility for gold is that wave C actually pulls back to the fourth wave of lower degree. In this case, is somewhere down here. Okay, and then we get our fifth wave up to new
Okay.
highs.
All
So
right.
that's the gold setup.
Okay. Maybe gold sells off with the market.
Probably with the
Everything
rising
comes
dollar,
off.
right? So yeah, with the rising dollar.
Yeah, rising dollar, the wrecking ball takes everything lower.
So it would hit the entire commodity complex. It's already hit copper. Oil has not been able to take off. So if we simply go and look at the Bloomberg Commodity Index, which for a long time I've been thinking is wave 2, and waiting for wave 3, it's just that it's going to take longer. So I've made a shift in the count. I thought it would not go below 61% retracement, but now if we do get that dip in gold and oil and so on, we have to be open to the idea that wave 2 is going to get a little deeper before we get the next
3.
commodity bull run. Yeah, so we're going to have to wait for that. And that's
So
going to
yeah.
require a weak dollar also. Yeah.
What do you think that's going to be like next spring? Do you have any time window on it?
Looks like it's
For
going to take, next at least 12 months. We'll have to give it 12 months.
wow, a year. All right. Well, that implies a bust.
Yeah.
If commodities are going to go down for a year, they're going to hold up better than equities.
It's
when
possible that the commodity cycle turns a little earlier because I don't know because might not be the right word, but it could be. Looking at this chart, it looks like it can turn earlier
Yeah.
from maybe stimulus, maybe some early
Yeah.
move on the monetary side.
Yeah.
And also in oil, we see something like that. So let me also open oil.
Yeah, oil's taking its time breaking down.
Yes,
I
the
thought
large
we'd see
head and shoulders.
62 by now.
Yeah. So it's just not breaking the right shoulder. So, but this also same thing. It went up in 5 waves. We're
Yeah.
waiting for wave 2, and energy does end up being a large component of the commodity index.
You're looking for 40, huh? Okay.
I mean, just drawn
All
a
right.
line. I was
All
really
right.
not hoping for below this, but now
Yeah.
with the kind of triangle here, I
Yeah.
can't rule it out. I can't rule out that it gets worse and then gets
Okay.
better.
Yeah. Huge. Yeah. It's the next commodity rally. And maybe that coincides with the dollar peak.
Absolutely. Absolutely.
Yeah, I think we have everything cased.
Yeah. It's just need the patience to see it through.
Yeah. Oh, please, God. Anyway, Rohit, I've always respected your work. Look forward to seeing if we agree or not. And when we do, It gives me more conviction when I see your stuff. And I interview quite a few guys that use Elliott Wave, but you also do some different things that, you know, set you apart. You know, and why don't you tell people, you know, what you do and what you can teach them, and you know, if they want to get involved with you, how to find you.
Yeah, so I do publish my analysis at indiacharts.com. So people who want to read my work, they come to this place. We do a mentorship program where we teach them how to do wave analysis, how to use trade setups, money management, all of that, like in an intensive 3-month kind of session. And then we did recently launch, a year back, we launched this platform, which is called Strike. It's on web.strike.money. It has all the Indian data, including sentiment indicators, positioning of the institutions, positioning of retail, the futures positions, just like you get the CFTC data, particularly Indian data. So we've built this entire platform using trading view charts and various things. So people who want to do their own analysis on Indian markets, technically, fundamentally, they'll find all the data.
Are these proprietary indicators like your diffusion indicators?
Yes.
And you have a lot of them there. That's part of it. You teach people what they mean and how to use them.
Yes.
Okay, because it's Greek or Indian to me. So I think that's excellent. So what's the takeaway? Be careful about risk going into next year.
Yes,
And
because we have a lot of warnings. I mean, the yield curve's been warning for a long time now. It started to steepen. Started to steepen since September. We're above zero. And historically, all the times we've crossed zero is when the equity market sell-offs have actually happened. So that's what we need to watch out for, the next trend reversal in US equities. What is unusual and interesting is typically when this happens, we expect bond yields to go down. And we are still not seeing a reversal in bond yields. In fact, I thought this was an X and this would fall in 5 waves. This recent fall is actually corrective. So I'm having to remove this X and actually consider that yields actually go higher. So I don't know what this is going to mean in a time where we are getting higher yields and a recessionary indication at the same time.
That's the worst of both worlds. I read about this 30 years ago, that you can have a weak economy and rates go up because of supply. It has nothing to do with economic strength or weakness. It has more to do with less demand and overwhelming supply of paper, of treasuries.
Yeah, that's right. Yes.
So when you need rates to go down because the economy is suffering, they can't go down because you have to entice lenders to buy your paper with higher rates, right?
Yes.
Okay. Do you want to wrap it with Bitcoin? Are we in a 5 here?
Yeah, we are in the fifth, but it doesn't look complete. So unlike what we've seen in gold, and for a long time it was an inverse correlation with gold, Bitcoin, everything together.
Right.
Bitcoin is broken away. It is in the fifth wave, but the fifth wave, this is a weekly chart. I'll just switch to the daily chart. Within the fifth, I've marked this as 1 and 2, 2 times. So that means we've done 3 and 4. We still have 3, 4, and 5. That's 3 legs on the upside still pending.
Oh, wow.
And that can take quite some room. I've drawn a channel here, at least for the next leg, which gives us room till around 134,000 on the next move.
Okay. Yeah. All right. What do you think is going to happen to Bitcoin if we have risk off? Do you think it's finally going to affect it? Because isn't it it must be more than just an indication of liquidity. Plus, I mean, you have the biggest IR campaign in Bitcoin in history with President-elect Trump endorsing it and Musk calling, a department doggy coin.
If I just stick with the wave analysis,
charts,
if it would look something like this, and then probably join everything else on the way down. So it would eventually reflect the liquidity environment. But near term, it looks like doing something of its own. So surely uh,
Yeah.
it is acting as that safe haven for the time being.
Okay. All right. Are you a believer in Bitcoin? Are you a holder?
No, so in India, there are too many restrictions. We were really not allowed to participate in the early days. Even now, the exchanges are not regulated.
Well,
A lot of problems. So
maybe President Trump can convince Modi to also consider a
yeah,
strategic Bitcoin fund
yes.
like the U.S. is going to have. Strategic reserve of Bitcoins. We got to be close, Rohit. All right. Anyway, let's see. Um, Ryan, what was your question? I think he's asking about, oh, he's talking about Reliance Industry, the biggest company of India in terms of market cap.
Yeah.
Its year-to-date performance is -2%, while the Nifty is up 10. So it's relative there. Oh, there you go. Okay, so we're heading
So
down.
there's a massive so just to highlight, and I've actually written about this recently, there's a massive short position building up in Reliance Industries. You can actually see this on this chart.
Yeah.
This is the open interest in the futures market in India. India is one of the places where the futures market is very big in stocks.
Okay.
And throughout this fall, so as you're seeing the stock fall, and this is how we interpret it, we are actually seeing open interest go up as prices are declining. So we consider
New
that
shorts.
it's a huge short built up.
Yeah.
And this actually is continuing even today as the selling off. The open interest is once again gone to a new high.
Well, they ever turn it.
Now,
That's going to be
now,
a
what is the
squeeze.
cause? I don't know. Some people are saying it's Elon Musk coming to India is going to threaten their telecom business, which has been one of the money spinners. That is just the speculation. I don't know what is the
Hey,
reason.
is Elon Musk, is he vice president or is it JD Vance? Who is it? I mean, he bought a condo. He he bought a condo in Mar-a-Lago now. I'll tell you, these bromances, you have to be careful. They really turn into something. Anyway, Saloom, price is king. You're certainly right. And you know what? Rohit is a prince for coming here and sharing all his work over how many years now, buddy? 5, 6 years, something like that? 7?
Much longer. No, I've been doing market analysis since 1991 and
No, I'm
alien
talking
wave
about you
analysis
and
since
me. You and
1999.
me. You and
Yeah,
me.
we've been doing it for at least 5 years. Yes.
Okay. All right. Well, Rohit, thank you so much.
Yeah.
I hope you have a great first quarter because we'll be talking again in March. We'll see how this all plays out. We should
Surely.
know a lot by then, I would think,
Absolutely.
by the spring. Rohit Srivastava, everybody, follow him on X at India Charts. Go to his website. If you trade Indian markets, he's my go-to guy. All right. So
Thank you. Thank you so much, Dale.
you're very welcome. Prosper, buddy. And I'll see you next year. Okay, so that's a wrap, everyone. You're welcome, everyone. Okay, same to you. Don't just count your charts, count your blessings. See everyone to wrap it up tomorrow. And I have Jamie McGeever with me from Reuters. We'll talk Fed. Adios, everyone. Rehab, everybody. Take it easy.